What's going on, guys? Good morning. Another day, another dollar here with the Everyday Growth Advisors pre-market live stream. Hope you guys are having a good morning so far, or a good evening wherever you are. Just wanted to come in and give you guys a quick update. We had an overnight sell-off in the market on just the debt ceiling fears that have been kicking in. Of course, yesterday on Discord, I alerted members to go for a VIX debit spread, which we were anticipating as a hedge. So yesterday we went to go ahead and take that hedge against the volatility, which now we see the VIX is all the way up into 1979. We took a $20.25 vertical debit spread for about 90 cents yesterday for the 621 expiry, which means you buy the $20 calls and sell the $25 calls against them for a nice little credit to kind of support the play. That was a beautiful little play that we called out yesterday to kind of hedge your portfolio. And if you did take that today, it should pay out just a little bit as well. As the VIX continues higher here and volatility starts to rise on fears of the debt ceiling, blah, 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 la, da, da. You guys know the drill. That's going to pretty much give the market a bit more fears. And obviously, the debt ceiling is going to be resolved. There's not going to be an issue with that whatsoever. Now, we did speak about the pullback occurring, or the likelihood of a pullback in the previous live stream. And I've been talking about that for a while now. Where we are in this market, we're expecting a lot of whipsaws, just as I kind of positioned on the newsletter for this week as well. We are expecting whipsaws back and forth in this range. So we have to be aware that, you're going to have to take hedges. You're going to have to take protection against the market. And just like anything, you have to make sure that you are putting your portfolio in a position where you're protecting your profits. This is exactly the reason why we went for some VIX debit spreads, right? In terms of the macro, nothing has really changed. I think mainly we have the debt ceiling crisis that is weighing on majority of the market's mind this morning in the AM. If that accelerates a little bit, we might see the SPX dump all the way back down to 4,100. Below 4,100, if we lose that, then 4060 is going to be the next level. 4115 is going to be a key level today to watch for a potential bounce. This has been a very, very strong level of demand. Very strong level, right? You can see majority of the time we've come into this level, we've seen aggressive buying. So I wouldn't be surprised if this is the bounce level today for a potential pullback. And then maybe if we get a continued wave further down, that, a bounce here and then the retest of 4150 might lead us back down to 4060 for this completed wave cycle. So it's really going to be dependent on where this market wants to push the direction of price action in this next session. And then also in 3.5 weeks from now is FOMC. So as I've mentioned many times, keep that at the back of your head as you're trading, because the market's going to start to price in the possibility of higher rates for longer, which I already mentioned on the newsletter for this week. So there's a bunch of different things that the market's trying to price in at the moment, and I think the best way to approach this is to kind of take it one step at a time and go as you are kind of pulling this. Now, one of the major things that you would have realized or noticed in the past two trading sessions is the Nasdaq has been actually growing a little weaker. So as the past two trading sessions have formed, we saw a little bit of consolidation here, and then almost immediately a sell-off here. And mostly was led by Apple and Microsoft. If you look at both of these, they had significant pullbacks in the past 2 days from their highs of the local highs in the past couple of weeks. So seeing Apple rejected a 176, which is the previous rejection here, all the way back in August, might see this actually come back down to the 164, 165 level before it starts to move back up again. And a similar move happened on Microsoft here. If you look at it, it actually broke out of it, but a similar move happened with Microsoft not long ago. It's just that Microsoft was a bit stronger with the AI news, right? And we might see Microsoft, come back down a little further than where it is right now in order to retest some of these lower levels. So we will be ready, obviously, to take some downside hedges or add additional exposure on Visa and other, the VIX, I'm sorry, not the Visa. I said Visa because Scotty said Visa. I was reading what you were saying. But yeah, additional exposure on VIX and also SPX puts, if need be. If I see momentum start to really tick up today, and maybe a pullback here, I will see if I can scalp some downside. But very unlikely, I would say, very unlikely. So we'll see what happens in this trading session today. As always, we're trading live with the team for a little bit when the market opens. So if you want to join, you can for 14 days for free and trial us out on Discord. So we hope to see you there. Okay, let's see Visa. All right, Scotty, what's up, man? How are you doing? Good morning. Visa. Okay, so up into the supply zone, rejected pretty heavily, and then once again down again. So this looks pretty decent for that downside swing play. Now I don't know if I would take this right away though. I think I want to wait for a pullback here. I like the setup. I mean, this gap down. This is a pretty aggressive gap down, by the way, because it's a breakaway gap. So it's past the support level here. If it kind of opens up here and starts buying up, I would be comfortable taking a short here. I took a short position on Netflix yesterday too, so this hopefully should continue its downward descent today. And that was like one of the few positions that I hedged against. So Netflix, now I bought some 350 puts for a day trade. I closed out some and then left some runners. This week has been actually a pretty decent week so far. I have to realize some losses obviously, but all in all a pretty decent week here. And I think with this setup here on Visa, you want to wait for a pullback before you actually get in short here. Below 222 is a decent level at which you could see additional momentum selling, but a pullback into what 228 or 227 would be a nice spot to start a bearish position. It's going to have 2 consecutive gap downs here, so I think that's a pretty decent setup. That's the way I would play it, Scotty. Now, I'm going to go through the usual suspects because I know you guys are going to have a ton of questions. So Tesla is one of them. Now, there was a lot of increased buying in Tesla yesterday, and then a pin bar formed, and then it gapped down today, this morning. Now, it doesn't mean that Tesla can hold this level and still continue in its upward ascent in the next couple of weeks. But I would just be cautious here because I know that yesterday everybody was very bullish on Tesla, and obviously it was for good reason. It has very good momentum, and it didn't slow down. And then the market dropped overnight with NASDAQ pulling the rug, right? Which is, we were very, very well aware that this was going to happen. I mentioned it on Discord multiple times that I'm waiting for a rug pull to happen. That's one of the reasons why I already hedged with the VIX, right? So the VIX returns will pay for any of the pain that I'm facing on any other swings that I have, right? The other one was Amazon. And Amazon, actually, if you think about it, didn't actually get clapped that hard compared to everything else this morning. It's still sitting at that 114, 115 level, which is really nice. It hasn't really moved down. So this is pretty strong relative to the market right now, considering the market has gapped down. So this is one to watch in the next couple of days. And we did see some bullish Amazon flow in the past couple of days from, I would say, unusual options activity. So I would definitely have a look at this for potential 120 upside, 121, 122. These levels are very important as we head into this next few sessions. Now, remember, how aggressively we get bought up on NASDAQ is going to set the tone for the entire market because tech makes up the biggest sector of the S&P 500, right? You can see that right now, how aggressively this market is selling off is due to a handful of sectors, not specifically just bound by tech, right? Tech is obviously one of them. But then there is, so energy gapped up, financials is another one that's gapped down just a little bit. You have consumer staples that is gapped down just a tiny bit. You have healthcare that's gapped down a little bit. You have materials slightly, industrial slightly, communication slightly, real estate slightly, utilities very slightly. Retail is actually up today. Semiconductors is one that came down, right? Pretty aggressively. Oil, energy are actually up. So yeah, that's something that you have to pay attention to here. Energy is a leading sector just right now, and then technology is a lagging sector. So you can see semiconductors and technology are both lagging the market right now, which is good. I mean, we need pullbacks, right? Remember something, guys. These pullbacks that you get in the bull market, and yes, we are in the bull market now, right? We've reversed out of the bear market pretty much at this point, right? Look at from the bottom, right? We are from the bottom back to 18%, but right here where we were just 2 days ago was 20.63%. So we are out of the bear market. Once you retrace 20% from bottoms, that's you're out of the bear market already, right? So S&P 500 was out of the bear market just 2 days ago, right? And now we're kind of at, once again, 18%, which is a nominal pullback, right? So these nominal 5%, 10% pullbacks are needed for the market to kind of create liquidity, create space, cause panic, and what more better to do than the narrative of a depth ceiling, right? So that's something that you have to obviously keep at the back of your head when you're trading. So with Tesla, I would say wait for a bounce, and then you can take some more upside. Amazon, same thing. With, let's see, Baba, no, I'm no interest in trading Baba just yet. Datadog was another one that I was looking at for the past couple of days, but not really interested in this right now. This is a good short opportunity, potentially below $91 or so. I would like that. Netflix, we'll see if we can continue its downward descent today. It might actually squeeze before it does it, so let's see, right? I only have runners on them. Majority of the positions will close out. And then NVDA. NVIDIA, we need that negative catalyst on this stock in order for it to come down. So we're going to have to play that one closely. AMD is another nice one. Look at this bearish close on this pin bar on the daily. And then now a gap down into 105, right? So almost a $3 gap down. Looking for potential blood here with AMD all the way back down to around 102. And then ultimately $100. So this would be a good spot for AMD to potentially see some downside. If you have AMD shares, you should consider buying some puts on AMD in the short term so you can hedge your shares, right? Or you just take a hedge against the entire tech sector by going short QQQ or taking SQQQ calls. You can do an inverse ETF, right? There are many ways you can do this, right? So yeah, that's the way that I would play this. Other than that, yeah, there's not really much else for me to give you guys in today's update. I think on Friday, let me see the date on Friday. So Saturday is my birthday, just so you guys know. 26, yeah, I'll be here. I'll be around here. I think only starting from next week. Let's see, next Monday. Yeah, so next Monday, I don't think I'll be holding. Actually, I might hold a live stream, but not. But I'll let you guys know by Friday, or yeah, I'll let you guys know by Friday because I'm moving apartments. Sometime next week, right? 29th is when I'm actually gonna move, which is the Monday. So I'll keep you guys posted. Happy birthday in advance. Thank you, man. Thank you. Appreciate it. Yeah, it's going to be big number 32 this year. Not exactly growing younger here. So, yeah, anyway, so 29th is when I'm moving my apartment. So, and then I'm flying off on the 31st. So it's going to be interesting to see how that plays out. But yeah. Coolio. Thank you, Scotty. Thanks to the rest of you. I appreciate the birthday wishes in advance. But yeah, as of right now, that's all I have as an update for you guys. Watch this volatility here. Remember, guys, VIX is up, so expect whipsaws back and forth. It's not just going to be one way. But obviously, as the market falls and then greed starts to fall off, we're going to move more back into this neutral area. Remember that yesterday we were in greed, and today moving back into neutral sets us up for a potential squeeze intraday. So keep your eyes on that, and I think that there will be some potential opportunities for a bounce play in today's session. You'll have to watch the tape and to know when exactly that's going to happen. So apart from that, watch this 41.15. This is a key support. This is where the bounce could happen. And until then, I think keep your risk assigned pretty tight. If you miss this wave down, it's all good. You don't need to worry about it. It's not like you're going to catch every single wave, so don't try to. And yeah, just hedge your portfolio temporarily. If you haven't hedged yet, don't hedge now. But just stay with cash, right? Just stay cash. If you haven't hedged, you didn't buy VIX, you didn't buy puts on QQQ, you didn't buy puts on SPY, that's all fine. Just stay hedged in other ways by staying in cash. Don't take stupid positions and be safe. All right, I will see you guys back on Friday once again for another stream. And yeah, till then, take care, peace, love you all, bye.